Stocks have been jumping after a better than expected jobs report for May, and joining me to talk about this is Jonathan Corpina from Meridian Equity Partners. Thank you again for joining me, Jonathan. It's always a pleasure.
Thank you, Jess.
Now, I've talked to you the last two times the jobs reports have come out for March and April. Was there fear going into this one? If there was a bad report, then it would seem like, okay, well, job growth is slowing, but then at the same time, if we got a good report, then it would mean, oh no, the Fed's going to, scale back their stimulus program.
There was fear all around going into this report. And just like you said, we come in low, the economy's not growing fast enough. We come in too high, Fed puts the brakes on. So we came in right down the middle, and it's quite curious to see the way that this did come out, because this is what everyone wanted, and it makes everybody happy. And we all know that you can't always make everybody happy. But clearly with the way the market's reacting today, for now, this is exactly what our market needs. It's exactly what our economy needs. We have the confidence that the economy is growing, still at a slower pace, but it is growing. It's not too fast where the brakes start coming on from QE. So at this point right now, let's just take one day at a time, and we'll take what we got this morning.
Now, when I talked to you when the April report came out, the same exact thing happened like this week. There was a ADP report that came out that was very disappointing, and then it surprised on that Friday, just like this week. But also, the numbers for March and April were revised down. Is that concerning when that does happen later on, when, say, in April, when that was supposed to be a good report, but it was revised down a little bit?
Right. So when we get these numbers, yes, we look at the top line numbers. Where are we today? You have to dig a little bit deeper and wait for those revisions to come out. The revisions that we saw from March and April really weren't market moving, in my opinion. Put them together, the number was like 14,000. So it really wasn't going to make a big effect on the market. I think the overall top numbers really overshadowed some of the revisions that were there. If we saw bigger revisions, yes, I think investors would have focused on that a little bit more. Would we have seen those rallies as much? No, but I think the market would have accepted the information so far as positive news. But the revision so far, for what we speak, clearly just wasn't going to be a big factor today.
Now, the past few times I've talked to you, the participation rate has been at the lowest it's been in about 30 years. And you mentioned, this is something we need to see if there's a pattern. Now that it has been 3 different reports that have come out, and it's stayed at that same pattern, now we have new graduates that have just graduated in May and June. Is this concerning going into the next few months?
It is, and if you look at some of the new job creations that were there, it seems that those jobs were appropriate for college graduates in the restaurant business and the retail business, and it doesn't take into consideration the 30-year-olds, 40-year-olds, 50-year-olds who are out of jobs and what new jobs are there. So yes, it is a concern that's there. When coming into this year, we had that conversation of we have to really wait and see how tax changes are affecting our economy and how people are spending money, how it's affecting job growth. We're not really seeing that big movement, I think, that we were all waiting for. So we're going to have to continue to wait to see if this changes at all. And I think the government clearly can work with those numbers as far as their interaction with QE is concerned to help this individual problem.
And finally, in the last few weeks, the markets have been volatile because of the Fed statement saying, it could be this summer when they start to scale back, but it seems like they're not going to do that just yet. But when they do say they want to see substantial improvement, what exactly does that mean? Does that mean they want to see unemployment at 6.5%? What does it mean?
We don't know what that means. And I don't think they know what that means. I think that's a very good hedge answer that they can put out there. I think, in my opinion, what we want to see is going to be just continue stabilized numbers. That shows growth. If you're looking at a chart on the economy, if you're looking at a chart on a stock and you see it start to build a baseline, that's when you have a stronger reaction on that stock to move higher. So I think that's what we're looking for here as far as economic data across the board. Flat is good at some point, and from there it builds a base and kind of moves higher. So from what we're expecting out of Washington, I think everyone kind of dissects that information on their own and extracts what they can. But if you take a step back and look where we are now, it seems we are moving in the right direction.
I do have one more question I remembered about. Next week we are going to see that retail sales number on Thursday. Besides that, what should we really be focusing on next week? Is that the big thing?
That is the big thing, and not a big economic calendar. What I think we should focus on is going to be some headline news that come out. So we can't obviously predict what the headline news is, but if you look back over the past 2 weeks, I think there's 2 topics that are out there that help with the headlines. One is merger and acquisition news. Anytime we see that, I think that's viewed as positive news. We're seeing companies spend money and using it either to invest in their own infrastructure or to buy other companies. And 2 is corporate buybacks. We've seen a couple of corporate buyback headlines that are out there. And once again, cash on hand. So we talk about how much cash companies have during earnings season. When the reports come out, what are they going to do with them? When you see them invest right into their own stock, I think that's a positive headline that's going to be out there too.